Hello everyone, welcome to Mooneys Accounting Academy. In this video, I will take up 12th class accounting chapter, Accounting of Partnership Firms. All the 12th class students, you watch these videos regularly, which I will be uploading, and you will get a good knowledge on these topics of 12th class, and definitely it helps you in scoring very good marks. All the best to all my 12th class students. So keep watching my videos, share it, and if you like it, you subscribe my channel. So in the first, I will take up partnership accounts, accounting of partnership firms, that is 30 marks weightage in CBSE examination. So try to understand, CBSE examination has 30 marks, and in the other boards partnership firms are there, the weightage differs, right? But concept doesn't differ. Partnership concept doesn't differ. Okay, partnership fundamentals, partnership topics, all these are same, only the weightage differs here and there. So here let me begin the partnership accounts. In accounting of partnership firms, especially for CBSE students, it is for 30 marks, and it is divided into fundamentals of partnership firms 10 marks and reconstitution of partnership 20 marks. Okay, and I will be concentrating on fundamentals of partnership firms. Today I will take up some points of fundamentals of partnership firms. My dear friends, let me begin partnership accounts. So in the first video, I will explain to you what is partnership and why do you want partnership firms. What is the reason for the existence of partnership firms? Partnership firms came into existence to overcome the limitations of sole trading firms, because in sole trading firms there are some limitations, right? What are the limitations of sole trading firms? One, you don't have the division of work. Only one single individual has to take up every activity. This is the major drawback of sole trading firms. Similarly, the sole trader, he may be having money, financial support, but he may not be having the managerial talent. So again it is a problem for the business, because in order to get success in the business, a person should have not only money but even managerial talent also. Okay, so in the partnership firms, you have the combination of these two. Suppose a person has financial support, and if he is not having the managerial talent, at least he can take the help of the person from whom he can acquire that managerial talent. So these two people together start the business firms, right? So this is the concept of partnership firms. So you remember one thing, in order to overcome some limitations of sole trading firms, partnership firms have come into existence. Okay, similarly companies also. Companies have come into existence to overcome the limitations of sole trading firms as well as partnership firms, right? So companies came into existence. So we will be discussing in our 12th class videos one after one. So in this first video, I will be taking up the partnership firms and the first chapter on in partnership firms, fundamentals of partnership. So let us discuss the topics included in fundamentals of partnership. What are there? What are those? In the first, you have legal provisions in the absence of partnership deed. So that means whether a firm can start without any agreement. Yes, of course, partnership firms can start, they do the business even in the absence of partnership deed. So in order to govern the partnership firms in India, there is an act, 1932 Partnership Act. Okay, it of course it is amended, and the latest amendments have come into that Partnership Act, but basic act 1932 Partnership Act. Okay, so that legal provisions we will discuss in the first part. Then after the legal provisions, we will discuss about the capital accounts maintained by the partners. What are the different methods? maintained by the partnership firms as far as their capital accounts are concerned, right? So then after the capital accounts are done, we will go for the calculation of interest on capital and interest on drawings, okay, and then profit and loss appropriation account preparation, then past adjustments, and then the guarantee of the partner. Okay, so guarantee of the partner means, so sometimes when a partner may insist certain amount of profit always, irrespective of the profit, sometimes whatever the profit that the others get, but I want this much of profit. So sometimes some partners may insist on the minimum guaranteed profit. So we will be discussing all these topics in detail in the coming videos. Okay, so today I will be focusing on legal provisions in the absence of partnership deed. So what are the legal provisions that are given in 1932 Basic Partnership Act in the absence of partnership deed? That means when there is no agreement on certain aspects, what to do, how to do the business. That is what we call it as legal provisions. When there is no agreement on certain aspects, how to solve that dispute. Suppose there may be a confusion in the minds of the partners, what to do, because there is no agreement on a particular item, then what to do. So legal provisions are given, some suggestions are given, guidelines are given in 1932 Partnership Act. Of course, even in the recent amendment acts also same thing is there. So what are those legal provisions? First, when there is no agreement on the sharing of profit or loss, then all the partners must equally distribute the profit and loss. When there is no agreement on sharing of the profit and loss, there should not be any other ratio, only equal sharing of the profit and loss. Okay, next, no partner is allowed to get interest on capital. No partner is allowed, no interest on capital. Okay, similarly, no interest on drawings, no interest on drawings. So they don't get interest from the firm, they don't pay interest to the partnership firm also when they are withdrawing the amount. Okay, and when any partner suppose sanctions loan to the partnership firm, then 6% rate of interest to be applied. Interest on loan 6% to be applied. Okay, so please try to observe and understand what are the legal provisions, what I have been telling you now. In the absence of any agreement on profit and loss, equal distribution, no interest on capital, no interest on drawings. Okay, and when any partner sanctions a loan to the partnership firm, 6% interest to be charged, and if any partner provides any service to the partnership firm, no bonus, no salary, no commission, right? So nothing will be allowed to the partners. Okay, and when a partner wants to join the firm, all the partners must give the consent. All partners must give their consent. They must give their approval for giving admission to a partner. Okay, so these are all the legal provisions in the absence of partnership agreement. Okay, so what type of questions you will get in the examinations? So just let us discuss in brief. Suppose Rajesh and Suresh started a partnership firm. Okay, Rajesh invested 10 lakhs capital, Suresh invested 5 lakhs capital. Rajesh 10 lakhs, Suresh 5 lakhs. Okay, and suppose there is no agreement on the distribution of profit and loss, and Suresh and Rajesh, suppose there is a dispute. Rajesh wants the profit to be distributed in 2:1. Suresh asked why to distribute in 2:1. Then he may say, I invested 10 lakhs and you invested 5 lakhs, so that means the ratio is 2:1. So let us distribute in 2:1. Okay, so from his side argument may be valid, but there is a point to consider here. What is it? there is no agreement in between Rajesh and Suresh to distribute the profit and loss. There is no agreement. So when there is no agreement, profit and loss to be distributed equally. That means Suresh argument is not valid. So the question comes to you like this: Rajesh and Suresh started firm with this much of capital, but Rajesh wants to distribute profit and loss like this. Is Rajesh argument right or wrong? So because we know the legal provisions, what is it? In the absence of any ratio on distribution of profit and loss, equal distribution. So naturally that Suresh argument is invalid. So these kind of questions can be given in the examinations. Similarly, suppose X wants interest on capital, but on interest on capital there is no agreement in the partnership firm. Then whether X claim on interest is valid or not. When there is no agreement, partner should not get interest. So his agreement is not valid. Okay, so these kind of questions can be discussed. Okay, so I hope you have understood these legal provisions. In the next videos I will be uploading, you will get some information about the topics what are there in the syllabus. Okay, thank you.